Amidst the backdrop of a global macroeconomic instability and proliferation of illicit activities in the market, the Nigerian capital market successfully pulled through, with the stock market being ranked among the best performing. That's in the first half of 2022. Despite uncertainties in the Nigerian economy, of course, such as political risk, inaccessibility of foreign exchange, challenging operating environment, and other global trends that have resulted in an unprecedented exit of foreign portfolio investors in the capital market. Well, of course, domestic investors trading in, as of June 2022, recorded transactions worth 1.4 trillion naira, while international investors trading activities was pegged at 243.5 billion naira. Well, I introduced him earlier. He's joining me via Zoom to look at the performance of stocks, of course, born in global economic issues. He is a financial analyst and a stockbroker, Mr. Rotimi Fakayejo. Good afternoon. It's good to have you on the show, Mr. Fakayejo.
Good afternoon.
Well, let me start with asking you that what is the state of the nation's stock market?
Well, if you want to measure it right from January to date, the market is standing very strong with a year-to-date position of over 15% positive. And that implies that the market has gained a traction of 15% year-to-date. When you look at the activities in the last 2 months, there's been a lot of, will I say, in the trading activities in the market, we are seeing lower volume, we are seeing lower value, and we are also seeing a depreciation of the market cap and also the all-share index. So it now depends on whether you want to look at quarter or you want to look at it year-to-date. If year-to-date, market is still very strong. But if you are looking at it with respect to the last quarter, then the market hasn't done well at all. But when you measure it with the global performance, I think we are still ranking among the best.
A good way to start the discussion. But before the current downward spiral in the market, now there was stability in many sectors and, of course, price growth. Now, what do you identify as the major cause of the market crash?
Well, I think the first point we need to look at that is affecting the market negatively is liquidity. The inflation trend has been there, but now the extent to which people can actually put up some saving, whereby they can make investments in the equity market, that ability has dwindled so much. And also the uncertainty with respect to security is another thing. Then also the incoming election, then also the global trade. So all these combined together are what's actually weighing down on the market. But for me, I still believe that with all that we have seen, and the market is still the way it is, then definitely it still remains a good place to keep your money.
Now, foreign players also complained about inability to repatriate profit back home due to dollar scarcity. Same with the aviation sector. We see sectors, all of them, talking about this. Even my earlier discussion too was around what Forex is causing with regards to attracting investments. Now, can our market cope with the long absence of foreign investors?
Well, it depends on the direction that you want to look at it. There are two ways with which foreign investments come into the country. There is foreign direct investment, and there is foreign portfolio investment. Now, the impact of each of these differ. Foreign direct investment come to invest in things that will actually lead to development of the economy, whereas foreign portfolio investment is all about taking advantage of the viability of the equity market or the bond market. So, and these investments are usually timed. They are tenured. They could say they are bringing in for 1 year, or they might not even be specific. Whenever they desire, they can take back their money. But when you bring in foreign direct investment, the money stays, and it helps to develop the economy. So, but looking at the impact on the Nigerian equity market, we are seeing a good measure of stability since towards the end of 2019, all through the end of 2020, 2021, and even up to date. They are saying that the extent to which we have gotten foreign portfolio investment in Nigeria has dwindled so much because foreign portfolio investors cannot take their money and when they desire. So, and this has created an advantage for the home market in the sense that we've had a lot of stability over time. And that is making the equity market to be more encouraging for investors to put their money in. Unlike in time past when the activities of the foreign portfolio investors was very, very vital. I mean, as at that time, they could decide to take their fund back at will. And whenever they are doing that, it brings down the market because they do a massive sell down. And the volatility as at that time was not in the interest of real investors. So it has its own advantage, it also has its own disadvantage. But I think that what is more is that the foreign direct investment has really been very, very much hampered. But I think I will continue to say that the partial exit of foreign portfolio investors from the equity market, I still want to believe that is a blessing for the local investors.
Let me follow up with that and ask you that won't the pressure be too keen on domestic investors? They've been doing their best, but can they sustain this?
Well, it really depends on how you are looking at it. They've been doing their best, they've been putting in money. And you know, the secondary market is all about the money revolving in a cycle, or stocks revolving in a cycle. I have bought, you want to buy, I sell to you. There is actually, we haven't had any serious public offering in recent times, except for the last one, which was the very big one, which was MTN. And after then, we've not really had any serious one. But even that one was actually an offer for sale. So what I'm saying in essence is that the impact still remains at a very, very low level. And I believe that investors are putting their best and they are getting the best out of it. At least they are very much sure now that if they buy an equity now, it's most likely that the price remains at the price that they bought, or reducing just by about 5%, or moving up maybe with a bigger leap. Unlike in the time past, when you will buy and you're not sure what will happen. We've seen equities drop from the initial value that they had to less than 50% in the space of about 6 months. So investors don't like this. But for this that we are seeing right now, it's very good for the local investors.
The Nigerian government is also carrying huge loans portfolio, talking about both domestic and in the foreign markets. Will the bond market still be attractive for government to take more loans from the public?
Well, I think concerning the bond market and also the government bonds, whichever way they want to denominate, either in naira or in dollars, I think over time it has not really given good advantage to the Nigerian economy, because most times when the borrowings are done, they're usually done to finance consumption. And that has increased the debt burden of the Nigerian economy. So I believe that with the bond market, I don't really think the local market may not be able to sustain the actual good ones that they want to do. Sukuk bond has been quite very impressive and successful, and all other few ones that they have been doing. But I want to believe strongly that the government has to deeper into how they balance their portfolio. But so far, so good. I don't really think it's even an advantage for the government to keep borrowing as they have been doing in the past, because it has not really added as much value as it ought to. So local investors may still be able to support the bonds, but not to the extent it will have been with the participation of foreign portfolio investors.
Let's talk a bit about sectors now, and my focus will be the oil and gas space. We've seen a little bit of stability in the crude oil market, and the price of crude has been, well, favorable, between $90 and $100. What is happening with stocks around that space? And of course, the liquid stocks that we talk about most times, the banking stocks. What is playing out? Some banks were losers earlier in the week. Let's play around these two sectors. What is happening? You could also touch around consumer goods. What is playing out in that space too at this time?
Well, first of all, you're talking about the fair stability in the price of crude. And we only have two players in the upstream sector that are listed on the exchange. One is Seplat, the other one is Wando. And the other ones are majorly downstream players. And the leap that we have, the good performance that we have seen in the oil and gas sector is basically born out of the performance of Seplat and partially, to a little extent, Wando. But for the other ones in that particular sector, we've not really seen a very good one, except again, if you are looking at Total, which has also given a good return to investors. Going to the banking sector, we know fully well that that is actually the flagship of the Nigerian equity market. And we've seen a situation, is a known fact that the largest number of shares issued by any company virtually come from the banking sector. We have the list of them, which is WEMA at about, Stanbic at over 10 billion, WEMA at over 12 billion. Every other one are above 25 billion shares issued. So the extent to which these are traded over time, the float in the market is very high. So we have a lot of liquidity in that particular sector. And they have been performing well. But for the huge numbers in issue, that is the reason why we are seeing the kind of low trend that we are seeing there. But when you talk about value traded and volume traded, the banking sector has it. When you talk about how much traction they have gained in the last months, they've not really done well at all. When you look at the likes of Zenith, GT Bank, GTCO, UBA, Access Corp, and the likes, they've not really done fantastically well. The only one that would have done well, maybe to an extent this year, is FBN Holdings. And for every other one, we want to attest to the fact that the large number of shares in issue have been majorly responsible for their stable prices or downward trend, as the case may be.
Okay, almost finally now, because I guess we'll just take this opportunity to look at the figures for today to wrap up this interview. But I want to ask you this. Inflation, of course, on the high side. What again? Unemployment rate is on the high side. All of these negative feelers and figures from both the NBS and other agencies that come up with ratings and figures, it's worrisome. And many say that it has an impact one way or the other on activities at the exchange. How much of an impact do you think this is having at the moment? And how worried are you with all of these negative figures that we are getting? Mr. Bakarijo, can you hear me now?
Yes, I can hear you.
I was asking you that all of these figures from the NBS and other ratings agency looks worrisome and everyone is worried about it. How worried are you and how does it affect trading in the market?
Can you take that again, please?
I'm talking about inflation figures on the high side. Unemployment rate is on the high side. The economic outlook is not looking too good with the global issues that we face. How worried are you with all of this and how does it affect the market?
Well, is a lot of worry, a very big worry at that. And it's really impacting on the market to the extent that the kind of trade volume and volume we are seeing these days is not encouraging at all. I think earlier in the week, we saw a situation whereby the total value traded was less than 600 million naira. That is just, when you want to convert that to dollars, that's just about $1.5 million traded for the entire market in a day. That is not encouraging at all. So it's really hampering the growth of the market and also the daily activities. And it goes a long way to affect everyone that is a participant in the market. The volatility, we are not seeing prices going up. We are seeing prices trending down gradually. So it's really, those figures are really hampered. Though a reflection of what is happening in the economy have made us to know that they have given us more credence to see why we are seeing in the equity market.
What dividend patterns do you anticipate from companies this year?
Well, it's still going to be very fantastic because the fundamentals still remain good for the companies. The consumer goods are very much on the other side before. I think a majority of them have come back now declaring profit and paying dividend. So the dividend trend, I don't think is going to be really hampered because we've seen the results up to half year, and those results are not disappointing at all. So that trend will still continue. And I think that should be a great encouragement for investors to hold on to their investment or even take up more positions.
I'm sure you've seen the figures for today, 0.15% down, the gainers and the losers. Let's wrap up on that note. What is your reaction to this?
Well, it's quite expected at this time because there is nothing actually to motivate investors at this time, and also the liquidity as well. So, but it's still 0.15%, maybe gradually on daily basis or a little above that. It's still very much in good stead. Rather than a scenario whereby we see a massive sell down and the market losing up to about 1.52% in a single day. So for what we are seeing, it's quite expected, and we believe that we'll be able to keep that up towards when we may see figures for third quarter, which may stabilize the market a little. Then also we'll now look forward to the full year ended, in spite of the fact that an election is coming.
Mr. Fakaijo, I must appreciate your time. Thank you so much for joining us on the show today. Stockbroker, financial analyst.
A pleasure.